Welcome to the Traders Expo 2017 here in New York City. I'm Matt McCall, joined by the legend, Cody Willard from Trading with Cody. Great to be with you, buddy.
Hey, thanks, man. I like the legend status.
I had a couple words in there. What would you like?
Yeah, you promoted me to legend before the interview started, apparently, because you could have gone with another one or two.
You are. I'm not just saying that.
Appreciate
You're my buddy, but you are.
Thanks, buddy.
So let's talk a little bit about this market, because we've had this Trump rally, and I'm going to bash the mass media because you're going to be okay with that. But I have CNBC app on my thing, and you have your Scutify app, which we're going to talk about in a minute. But my CNBC app, and if the futures are down a tick, I get an alert that says the Trump rally's over, everything's over, and the market ends up closing up. So what is the reality out there? Is this rally going to continue? Is it over? What's going on?
Look, let me start by saying trying to game whether this rally is over or continuing is what everybody here is trying to do, and it's probably impossible.
I agree.
I'm not trying to make my profits or my portfolio, which I am looking at over the next 30 years, not the next, say, 30 days or even 30 minutes. So stepping back, yeah, I mean, we can call it the Trump rally. How much of it is just sort of unfettered optimism about the continued corporate profit boom that we've been experiencing since 2008. We have had a bubble-blowing bull market for 10 years now. And are we done with the bubbles? Probably not. It looks to me like we still have further to go in this. But at some point, look, man, 0% interest rates, tens of trillions of dollars of debt from the government level, tens of trillions of dollars, hundreds of trillions of dollars from the consumer level. As long as interest rates stay low and don't spike, things will be fine. Even a gradual rise in interest rates over the next 2 years probably wouldn't matter. But everything, if you really want to try to game when the end of this bubble is going to happen, it's going to be when you see the 10-year spike from, say, right now it's at 250 to, say, 350 over 3 months. Something like that's what I'm looking for.
What's amazing is recently the Fed's become more hawkish. I saw this morning that the odds of a March rate hike is up to 50%, which is at 30% a couple weeks ago. And at the same time, interest rates are actually dipping. They're not going higher.
The 10-year's dipped from 250 down to 235, 236 over the last, say, 2 or 3 months as the Trump rally's extended. And something I've talked about a lot over the years is that, look, the absolute interest rate at 0 or at 1% is still bubblelicious. It's still like, you remember in 1999 when Alan Greenspan took the interest rates down to 1%, and we had a huge blow off top to a bubble. And we have now, since 2008, we're on year 10 of every emergency measure that they put in during the crisis still in existence. They have they've not redone any of that. You still got 0% interest rates. You still have the Federal Reserve itself taking on trillions of dollars of treasuries and worthless real estate assets and things that the brokerage firms are giving to them. All of that, I think, is a much bigger deal than the next 25% or the next 1%, even at 1.5% interest rates. That still means the banks are borrowing money at essentially zero from the taxpayer at home, and the taxpayer at home is borrowing it back from the banks at 22% on their MasterCard.
So basically, we're going to pay the piper eventually. We just don't know when that time is.
Yeah, and that's what it's all about, right? So you step back, and I don't think it's this year. I think it could be 5 years, and it could be 50 years. Like, I mean, it doesn't have to be anytime soon, but certainly you got to look for catalysts, and I think the big one will probably be a spike, not just a gradual rise, but a short-term spike in interest rates that then you got banks and a whole lot of corporations that are ill-prepared for that discombobulation, and then all of a sudden everybody panics, and then you get a financial crisis, and then Morgan Stanley can't pay its light bill, and then we have to bail them out again.
Which is going to happen at some point, but like you said, we don't know when that happens.
No.
I mean, we could be retired. We hope we're retired by the time that happens.
Heck, I might retire next month, so it could be short-term anyway.
Short-term anyway. All right, before we wrap this segment, a little bit, anything you're watching in the stock market right now when you wake up in the morning?
I'm all about the revolution investing, and so I've owned Apple and Google and Facebook for many years. My biggest win last year was NVIDIA. I bought it at 30. I still own it. Trimmed a little bit when it was near its peaks and haven't bought any back yet, but I still own a good chunk of NVIDIA. I look at that every day, and most importantly, I do step back and just sort of look at the global trends of the world. And smartphones, there will be 2 billion smartphones sold this year, 100 billion apps downloaded this year, up 25% from last year. Artificial intelligence, deep learning, self-driving cars and drones of any sort, these are going to be trillion-dollar industries in 5 or 10 years. I want to be investing in them.
All right. We're going to hold you to that because next time I'm going to get some ideas from you.
Okay, great.
All right. Trading with Cody Willard. Check him out. Thanks, buddy.